Let's take Tesla valuation and speak valuation to see what the company is doing. All we're going to be doing is we're going to be taking a look at the stock price, at the EBITDA divided by the stock price, essentially cash flow over capitalization. What does it look like? EBITDA is at $16 billion. Market cap is at $506 billion. So that means that the cap rate is 3%. That is small. That is tiny. That tells me that the company is overvalued again from that perspective. Let's compare it to Apple. Woohoo! Apple, $143 a share. Look at the market cap, $2.28 trillion. How about EBITDA? EBITDA cash flow is at $133 billion. But that gives you a cap rate of 6%. So it would appear that Apple is a bit less hotter from a valuation perspective than Apple, and therefore might make more sense for you as an investor. Let's take a look at Alphabet. Alphabet has a market cap of 1.242 trillion. And in terms of cash flow, we're looking at $94 billion. That gives me a 7.5%. So you got Alphabet, i.e. Google on one hand with Apple, and then you got still Tesla on the other hand, a little bit too hot for comfort, I would say. And I'm pretty confident because I look at those same numbers for Tesla in July and it told me it was overheating and we took a huge decrease. Let's see what happens next, but my money is on Apple.